Congratulations on the exit of Easy Crypto.
We started Easy Crypto back in 2017. If you want $50 of Bitcoin, you give me $50, you tell me where to send the Bitcoin and I'll deliver it to you instantly. It's not your keys, not your crypto. You have to design around that and not expect people to, mold themselves to your way of doing it. We've got this global communication system, but we don't have a global payment system. So I bought a Bitcoin just to understand how it worked. I'm now firmly in HODL camp. US dollar stablecoins are 90-something% of all stablecoin trade. We are backed one-to-one with real New Zealand dollars in the bank account. The Financial Market Authority have just set up a sandbox for fintechs for innovation to help encourage innovation and help clear the way where there is either regulatory impediments or regulatory uncertainties.
This is Mark Pavlikovsky, and welcome to the TechMates podcast, where my partner Henrik and I explore how Kiwi and Aussie founders are reshaping the future and what sets them apart. Henrik and I have been part of successful companies in Silicon Valley and Europe, and now bring that expertise to partner with entrepreneurs in Australasia. By sharing the personal stories of successful Kiwi and Aussie founders and how they got here, we hope to inspire you to dream big. This is TechMates, bringing an outsider's perspective to the stories of those daring to disrupt down under. Let's dive in.
So, Janine, thank you so much for joining us on TechMates.
Thanks for having me on, guys. It's great to be here. Great to catch up.
Yeah, congratulations on the exit of Easy Crypto. So you're the founder and CEO of Easy Crypto. I should have said that. You recently made big news. Tell us more about that.
Yeah, so we started Easy Crypto back in 2017. And then, it's been, anyone who's been following the crypto markets will know that it's been a bit of a wild journey since then. A lot of challenges with pricing, with competitors going out of business, with regulation, with very large hacks, all sorts of stuff going on. We raised in 2021, and unfortunately, just after we raised, crypto kind of fell off the cliff, and a lot of big negative news came out in the market with things like FTX and Luno. And so it had been a hard time over the last couple of years, but we had a few approaches sort of towards the end of 2023. So the board sort of looked at these and thought the approaches we had weren't considered good enough for us to take them, but we thought there was probably an opportunity in the market to look at a trade sale. So we went out to market out of 2024, and over a year later, it finally closed a deal. So it's been quite a journey.
And tell us more about the deals. You merged with an Australian.
That's right, yeah. So it's actually, I think, worked out really well in terms of the fit of the buyer, because for our business, like when we started the sale process, we looked at the potential buyer universe, and we're not yet at the stage where traditional finance, banks, share brokers, those kind of businesses are not really buying crypto yet. The share brokers are maybe starting to dip their toes in, but definitely not banking. And so our most likely buyer was going to be another crypto business, someone who's probably similar to what we're doing, and someone who's wanting to make a regional play and grow in the areas that we're in. So we have businesses in Australia and New Zealand and South Africa. And so you've got a lot of the big exchanges out of Asia. You've got a few across in the US, some in Europe, but we ended up selling to an Australian company, which has been great because they're quite similar culturally to us. They're not massively bigger. Like they've got around 3 times our staff and, a few more X on revenues, which is a great proof point for their business model. But they're actually, it feels like a really good fit between their values and culture and business model with what we're doing.
Awesome. You can just tell us what Easy Crypto do? What was the business you were in?
Yeah, so we're a cryptocurrency, what you call on and off ramp. So basically a way for people to take the dollars in their bank accounts and use it to buy crypto, or if they have crypto, to be able to sell that back to New Zealand dollars. When we started Easy Crypto, it was sort of around the same time that Cryptopia went under, which was quite a big, at the time, very public New Zealand exchange that got hacked and sort of failed quite publicly. When we started Easy Cryptos, we never wanted to be, we didn't at the time want to be a custodial player. We sort of thought the risk of holding customer funds was too high. And so we set up a service that operated more like a retail shop where, if you want $50 of Bitcoin, you give me $50, you tell me where to send the Bitcoin and I'll deliver it to you instantly. So it was more of like a normal click-through checkout business model of a retail store than an exchange where the exchange is holding your funds and you're trading.
Interesting.
Yeah, it made us a bit of an outlier though. Over the years, sort of when we started, that made sense. But over the years, kind of the rest of the crypto industry all moved towards the exchange model. And I think what we learned is that that's the more profitable business model. You make a lot more money because people are trading more frequently. And you can also earn sort of the assets under management income potentially as well. So yeah, there's a lot of, that will be sort of the next iteration of what Easy Crypto moves to with the new owners, is that custodian, which I think is better aligned to where the industry has ended up heading.
Makes sense. Yeah, it's interesting because when I first met you, I was very surprised because the model, the typical model is like a Coinbase or a Binance type thing where like you just buy and then just hold it on the exchange. Actually, most people I think are not even aware that you can transfer it. When I first got into crypto, whatever, bought some crypto in 2017, like I just bought it on Coinbase, kept it on Coinbase, traded on Coinbase, sold on Coinbase, and then like lost a lot of money, forgot about it, never came back for like many, many years. So like I think that's the experience most people have. So I was actually surprised because it requires, I think, quite a lot of sophistication on the user's part in order to like set up a wallet, figure out where to send it. Did you guys kind of like, yeah, like who was your early customer? Like what kind of folks were the folks using Easy Crypto?
Our very first iteration of the business actually was, it was a fully end-to-end service. And this came from, my brother, who was my co-founder, and I, at the time, which was sort of late 2017, we had a lot of friends and family asking us about crypto, wanting to get involved, but finding it too hard. So our actual original service was an end-to-end, you tell us what you want, we'll buy it for you, we'll create a wallet for you, like a secure encrypted wallet, and we'll send that wallet to you so that you are holding the funds yourself. Because again, we were, I guess, also quite into the ethos of a lot of early crypto users is very much not your keys, not your crypto. And so there's a lot of, principles and, our ethos around holding your own crypto. So our very, very original business model was creating a crypto wallet and sending it to people. And then some of the early users of our site were like, hey, I've already got my own wallet. Can I send it to my own address? And we're like, oh, yeah, okay. So we iterated from we create your address to we create your address or you send it to your own address. And then over time, we retired the wallets that we were making because by that stage, maybe in 2020, the wallet ecosystem had started to evolve. There were things like Exodus, Trust Wallet, Jax, like more software options available for people. So we retired the wallet. And then we've kind of gone full circle. And now, a few years ago, we launched our own wallet, again, self-custody, but this time, an app that, is a lot more user-friendly, a lot easier to use than, say, those early wallet editions were.
Right. Interesting. Huh. Well,
along the way, right? That's always the startup way.
Yeah. That's kind of funny. But I'm just curious, whenever you'd send people their wallets, if you're sending the wallet, I'm assuming you're sending them their private key, which is how you like open the wallet, right? Wouldn't that mean that you also had the private key?
Yeah, so we would generate it for them, and then we encrypted it through a seed phrase that was generated client side on their browser. So just to dive into the tech for a little bit. So we never saw their seed phrase. It was generated on their side. They had to write it down. But what we quickly learned was that when you tell someone to do something and you tell them how to look after their money, that, it sort of often goes in one ear and out the other. And we had a lot of people just immediately come back to us the next week and go, oh, how do I get into my wallet? And we're like, we told you. But it was a really good learning, and you can't expect your customer to do what you think they should do. They're going to do what they're going to do. And, no matter how much you tell them this or tell them that, people will just do whatever. And we're all guilty of it, right? Like how many times are you on a website, you just click next through all the warnings. And so it's like you have to design around that and not expect people to mold themselves to your way of doing it. You've got to make sure your product caters for people who don't read instructions and don't listen and forget to download the thing. And so, it was a really good learning early on.
Interesting. What other learnings did you have from people, like from early crypto users? I'm sure there's a lot.
Yeah, the early crypto users were really interesting. Like a lot of them still use Easy Crypto. And like, I love that, we've just got a really strong cohort of people who've been in crypto ages. They liked Easy Crypto because it wasn't custodial. And also because, we weren't as advanced as exchanges, but we made it really simple. And that was one of our big focuses from day one was like, how can we make this simpler? Like, how can we make the page load speed faster? How can we make the number of clicks fewer? How can we make the instructions lesser? Like, how do we just make it the simplest journey we can? Mm-hmm. And that was something that I think, a lot of people, really appreciate it because crypto is complex enough without having to, make the purchase journey harder. There's always some things you can't avoid, unfortunately, AML and KYC being one of them, but where possible, we tried to strip it right back.
Makes sense.
Right.
Cool.
The company that's acquired you, tell us a bit more about what they're doing, their crypto exchange, right?
Yeah, so the company's called SwiftX. They're based out of Brisbane in Australia. They have a similar journey to us, actually. They were started by two founders around 2017 as well, looking to make the crypto experience simplest. They've got also a really nice focus on usability and simplicity. They've got a bit of a broader product set than us. So they have that exchange-based trading where, you can set a price and say, hey, when it hits this price, lock in my rates for me. They've got a few other nice features like, demo trades. They're looking at moving more into some of the traditional finance realm. And I think they've got an announcement coming out probably after this podcast launches, but I won't say it just in case. If you go to their website, they've got some new products and stuff coming out, which hopefully, with the acquisition of Easy Crypto over time, we'll be able to bring their product set and range out for New Zealand customers, which is really exciting. That's
cool. And if we kind of go back a little bit, a few steps, like what got you into crypto? What were you kind of doing before, and how did you get into this whole thing?
So I first got into crypto around 2014, and Yeah, I read about it on some forum on the internet somewhere. And at the time, I was just like, this thing makes a lot of sense. Like, my background was economics and finance. And I was like, we've got a global village with the internet. We've got this global communication system, but we don't have a global payment system. So I was like, well, obviously, this is going to get adopted and everyone's going to start using it. So, I bought a Bitcoin just to understand how it worked. And then over the next couple of years,
How much was it at the time?
it was around 3,000 Kiwi. And yeah, I was a poor student, so I couldn't splash out too much, but I was like, this seems like a good thing to get.
Wow.
If only I'd had more disposable income.
Do you still hold
but
it?
as you guys, it's like, after that period, sort of like 2014 onwards, it was just kind of a bit of a wilderness and nothing happened. People didn't start using this thing. Some people would mine it at their home computers, and it was and Silk Road was using it, and that was kind of about it. And then when 2017 came around, that was the first big hype cycle where Bitcoin and blockchain got into the public consciousness. And at that stage, I was working for a bank, and people knew that I had crypto. And so I was the go-to person for all the questions about crypto. I was having to do presentations to staff and customers and talk about Bitcoin, blockchain, what is all this stuff, how does it work? And so I sort of had to become a bit of an overnight expert in all things crypto, because I just get asked a question, I'd be like, well, I'll come back to you on that, and be like madly researching. I'm a very big believer that you can become an overnight expert at anything if you narrow the subject matter down enough. It's like, as long as there's a finite amount of stuff to learn, you can get up to speed and become an expert, quite quickly. If you have a little bit of time to throw at it. So that's what I did.
You still hold that Bitcoin?
I do still hold Bitcoin. Whether it's that original Bitcoin, I don't think so, because I managed to sell right at the peak of the 2017, just around Christmas time, 2017. Oh, wow. And then I bought back in 2018 when, the market had dropped a bit. So that was the one and only time that I've made good calls in the crypto market. Since then, every time I try to buy the dip, it keeps dipping. And every time I try to sell the peak, it goes higher.
Yeah, I think I bought my first Bitcoin, just 10 euros of Bitcoin in 2015. And I think I sold it also on the peak of the market. And I felt so smart. And now I feel so dumb.
It's funny. Interesting.
So, what's your guys' thesis on crypto? Like, you're holding Bitcoin, are you holding other coins? You think, is it going to be a multi-coin market? Is crypto just this initial blip and we'll all end up using CBDCs in the future? Or
That's interesting. It's an interesting question. I think, I think Bitcoin has really proven out its value proposition, right? It was incredible to see, a couple of things. The first is I thought for up until, it's probably true up until whatever 22, 23, even maybe enough 24. All the crypto assets were generally correlated. Typically, whenever a bunch of, and it typically kind of went from Bitcoin to go up, and then people would sell Bitcoin and buy shit coins, and then they would go up, right? And so you'd have this kind of wave probably. And then at a certain point, I think you saw Bitcoin just breaking out, right? And if you chart the Bitcoin versus ETH chart, if you basically denominate ETH and Bitcoin, it's just it's kind of going down, and then just really just fucking drops, right? And that's true for and so I think there was something there. And then when you saw the whole market just really collapse with the tariff announcement, all of the, obviously stock market went down by a bunch. All of crypto really took a dive. Bitcoin went down I think to 75K, right? It was maybe, I don't know, it went down less than everything else, and then just came right back up, and has been up. And all the other ETH hasn't really gone back up that much. Sol hasn't really gone back. Sol's gone up a little bit, right? But it's a smaller market cap. But I've just seen the resilience, and it's just so interesting, right? And now you're getting just institutional kind of, besides the ETF, you're getting kind of Trump talking about a Bitcoin reserve. You're getting other countries talking about Bitcoin. So it feels like there's a use case that's that there's I think a Schelling point now forming around Bitcoin as just becoming kind of a broadly accepted idea that Bitcoin is this sort of digital gold, right?
Yeah.
And in a time where maybe countries are disengaging from each other, maybe the dollar is less of a desired currency by folks like China and Russia. I saw something about Russia and China using Bitcoin to transact oil. I think people are starting to understand, institutions are starting to understand that there is some premium to having this sort of fully independent asset that can be inflated away. So I think that's one use case. I think very, very solid use case. That I'm curious if you think that's that's true, and if you're seeing that as well.
Yeah, I mean, back when crypto first came out, obviously Bitcoin was the first, it was like great. And then all these altcoins started coming out, and I was like all about, what are the different use cases? What are the, like quite exciting, got all into altcoin mania. But now I'm not a Bitcoin maximalist, but I do think that Bitcoin is a category of one. Like, I don't think anyone else, and it's really unusual. Like, kudos to Bitcoin, right? Because how often does the first version of a thing become the best or the most, widely adopted? You've got your MySpaces and Bebos, and you've got your, your Alta Vista search engines. And it's like usually someone takes an idea and improves it. And that happened with crypto, right? Like,
Yeah.
Bitcoin is not the best currency out there.
Right.
It's not the best way of doing a digital asset, but it's got that mana, that longevity, that track record. And I think, the digital gold comparison that's been bandied about for so long is coming true, which is, it's kind of cool.
Yeah. And then, I mean, obviously, like you mentioned CBDCs, or I mean, the other big use case, I think, is stablecoins. That's really coming into being, right? And I mean, you see there's charts, I'll probably put this up afterwards, there's charts of just like stablecoin adoption, stablecoin transactions usage. Like, that seems to be a very, very solid use case. And again, like, it's like, against, it's sort of, you can use, if you live in a country that's not the US and you can't access dollars, here's a very easy way to like access a currency that's stronger than yours, transact in it. We pay some of our folks in stablecoin and crypto because it's just easier, it's faster, it's immediately kind of settles. You don't have
to what you send them. They don't get some random bank fees deducted along the way.
Yeah. And you self-custody it, right? Like there's all kinds of benefits to it. But then the question is, well, what's the kind of settlement layer, right? And people have argued that maybe if most of them are settling on Ethereum, then like presumably Ethereum should actually like benefit from that. I'm curious what you think of that piece, like stablecoins, and also just like settlement layer piece. Where
I mean, I feel like the settlement layers can be aggregated out, right? Because it's like, sure, the coin. I mean, so for example, we've got a New Zealand dollar stable coin, and I find the space really fascinating and interesting because there is a lot going on, and it's finally, we launched a stable coin 2 years ago, and at the time I was like, I know it's too early, but better too early than too late, and now it's starting to get a lot more attention. And actually, our CTO is just off at a conference at the moment in the US around stablecoins, and it's like where the stuff is, it's starting to move, which is cool. But to the question on settlement layers, like, we have chosen to issue this coin on multiple chains because we don't want other people to have to create bridges. Bridges are really, problematic and hacks and all sorts of complexity. But bridges are so easy to spin up, right? So it's like maybe we've issued on ETH and then someone else wants to use it on Base. And if they, they could buy it natively on Base from us, or they could, bridge it, swap it, whatever. Like, ETH doesn't have control. Like, you can't lock it into the ecosystem. It can flow to wherever. So things will flow to where they are most widely used, where there's the best liquidity, where there's the lowest fees or the fastest speeds or whatever it is that users are looking for. So I don't know that it will actually benefit, the layer ones, potentially the layer twos, but it's kind of like that layer will almost be invisible. And to what you're saying before about, people wanting to hold currencies other than their own, I think stable coins, the first wave of stable coins has been more proof of US hegemony, right? Like US dollar stable coins are 90-something% of all stable coin trade. And it's been frustrating as hell because, like, from here in New Zealand, I'm like, I don't necessarily want to use US dollars, but that's what the global markets trade in. But I think as stablecoins get more adoption and more use cases, and you have those kind of like seamless infrastructure layers of going between different currencies, between different chains, stuff can all there'll be massive arbitrage opportunities there in the early days, and then it'll all just condense down, and you'll be able to trade whatever stablecoin you want, whatever currency you want on whatever chain, and it will all just be seamlessly, meshing under the hood, which will be cool.
Yeah, I mean, actually, it's a good. So that's one thing that I like. I was actually very so, and you sent me, one of the first issued New Zealand dollars. So I hope that is worth a lot of money in the future.
Exactly. I think I've got number 3 or number 4. I wasn't quite high enough on the priority chain to get number 1, but I'm looking forward to my commemorative issue NZDD being worth millions in the future.
Oh, wait. So who got number 1? I thought you'd get number 1.
The team, the 2 guys who worked on the project most closely got numbers 1 and 2, and then I think we had a competition for who named the stable coin, and they got number 3, and then I think I was next in line, number 4. So
wait, what's there to name? It's just New Zealand. What is it? Is it just NZD, right? NZD?
Yeah, well, I mean, we had a lot of choices to start with. Like, we couldn't, the ticker NZDC had already been trademarked by Circle, so we wanted to use not that. We could have gone ENZD, NZDD, NZ. Like, looking at Australia, they had, there are a bunch of different, like, naming, what do you call them? Like,
conventions?
protocols, yeah, that people use globally. There isn't one standard one. But yeah, we settled on NZDD, partially because we were working quite closely with AUDD, which is an Australian dollar stablecoin, and partially because, like there's a whole lot of things that don't make sense. But yeah.
Why did you launch a New Zealand stablecoin? Right. So like when I first saw it, I was confused. And I think we got on the call and because it was like, okay, like deepest liquidity is on USD, right? And there's like exchange risk, and then you have to provide liquidity on NZD, like yourself. And then you kind of explained to me, like, this one thing that did make sense to me was whenever somebody in New Zealand is selling their crypto, or basically there's like 2 tax events or something, because you first kind of do it into USD and then USD to NZD, versus like here you can do it direct. Was that kind of the main reason, or were there other reasons why you guys launched it?
So the long-term reason is that, I firmly believe that digital, financial products and services are going digital. And as part of a digital layer, maybe in the early days of Bitcoin, we had this idea that Bitcoin was going to be some global settlement currency. We all know it's not, right? Because it's just too volatile. Like fiat currencies are going to be around for quite some long time. And so to have a digital equivalent of a fiat currency allows people to do things like smart contracts, cryptocurrency trades, digital forex with a settlement layer that isn't volatile, or that, is hedged to the right currencies that they need to be hedged to. So that's sort of the long-term thesis. Short-term, the initial adopters were always going to be crypto users. So like you said, Mark, if someone at the moment, say I've got $1 million of Bitcoin and I think Bitcoin's going to drop and I want to get out of that position, previously I had to take it into USDT or USDC. And then, that's okay. A lot of people don't mind holding in US dollars, but New Zealand-based traders, a lot of them actually prefer to hold in a New Zealand denominated stablecoin. And it also has a tax benefit that when you dispose of Bitcoin to USDC, that's one taxable event. And then that USDC, however it moves against the New Zealand dollar, is another taxable event. Whereas if you just expose to NZDD, because it's always 1-to-1 for the New Zealand dollar, you don't have to worry about any accounting on that. Once it's an NZDD, there's no extra gains or losses there.
I see. But like then I started wondering, like, doesn't that mean you guys need to provide liquidity and all these pools of like Bitcoin to NZD, ETH to NZD, right? Isn't that, and then aren't you like don't you have like a risk of like people, like, I don't know, like kind of wiping you out a little bit, or like taking advantage of if the pool gets unbalanced and things like that? How do you guys?
Yeah, this is one of the sort of decisions we had to make early on of like, do we want to be funding those pools, or are we just going to go let the market do it? And we sort of decided it's not really our core business. We're better to let the market, come up with market makers. And so like there is some DeFi pools out there. I'm aware there are some that get out of balance from time to time, and like, hopefully, markets acting efficiently, people should be able to see the arbitrage opportunities and balance the markets, but it's not something that we're actively doing. It's sort of a step beyond BAU for us.
I see. What is it? What goes into issuing a stablecoin? I know with Tether they have and this whole stablecoin thing has been, there's been many takes on it, right? Like the very first one was like DAI, and they, I don't know, like maybe you can, I don't actually know what they hold some assets, they have some treasuries, like, but basically it's like there's 2 kind of, I guess, broad camps. Let me know if I'm wrong, maybe I don't, but like one is like it's fully backed in the sense that like for every single dollar issue you have like some kind of asset that backs it, or the other one is like algorithmic, where like there's some reason why, some magic basically that happens that basically either burns or issues less depending on like where the trading's happening. And obviously in the second pool you had things like Luna, which just like completely collapsed, right? But yeah, is that kind of the right way to think about it? And then like kind of how did you guys think about how you approach issuing your?
And we decided, like, for us it was really important to be 1-to-1 backed and very transparent, because I think algorithmic is perhaps a little bit of a DAI's the exception, but I think sort of with what Terra Luna and things like that we're trying to do, I don't know if it's actually technically possible. Like maybe someday someone will prove that it is, but it seems a little bit like alchemy at the moment of like, can you mix things to make gold? I'm like, maybe not. So for us, we wanted to make sure that there was like real trust, transparency. It's something that we take seriously, being the issuers of a New Zealand dollar stablecoin, and so we are backed 1-to-1 with real New Zealand dollars in the bank account, and that I think it's the best way for stable coins. And like maybe over time you might get different kind of iterations or versions, but having that transparency and having end users should be able to trust that it will always be 1-to-1. And if there's any depegging, and we do see that from time to time, like USDC depegged for a little bit, and it was just because of market panic. It wasn't because of any actual change in the underlying liquidity they had. And again, if I had money and been at my computer and not been unavailable at that time, it would have been a great way to make a few extra bucks, is just to, buy up USDC that was selling at a discount for no good reason. But yeah, markets are not always rational.
Yeah, I remember that. I remember seeing that. And I think this is one of these things where, like, I think having time in the market really makes a difference. Like, I had not been, I think it was in 22, right, or 23, early 23, March 23, I think is when it like depegged and went down by like 20 or 30% at one point, USDC. It was around the SVB collapse, right? It was around that time. And what I thought was like, oh shit, crypto's really going down. Whereas I think if I had like been in it longer, I'd have been like, oh, this is a good buying opportunity.
I guess that's the thing, right? Is because I think the markets over the last few years have taught us all how resilient crypto is, and crypto's become increasingly resilient. Like, Bybit hack, what was that? $1.5 billion, like biggest hack. And the markets did this, and it was just like, yeah, tariff wars, stock market wobbles, all sorts of stuff. It's just, the resiliency's massively improved over the last couple of years, which is really, it's a really good sign.
Yeah. So do you somehow, because I guess like when you have a bank, and a bank, like in some ways, right, this is kind of what the government does. The government sort of says like, hey, we're going to issue, well, I guess maybe when you go back like a couple of steps, but at some point, like the government kind of issued a currency and said like, this is backed by something, sometimes gold, sometimes, I don't know, just the force of our will and the armies that we have or whatever, right? Like, and now you're kind of doing something similar, which is saying we have these kind of New Zealand issued dollars and we're going to issue an equivalent on the blockchain. Do you, to get people to trust that you actually have that, do you expose your treasury somewhere? Do you kind of like show people?
Yeah, we do we don't do it real time. It is something on our roadmap because as you might be aware, New Zealand is only just starting to get open banking. So being able to do things like expose your bank account balances in real time, like it's only just starting to be possible with open banking providers. What we do at the moment is we do a once a month sort of snapshot of our bank accounts. But as like, again, we're pretty early days with NZDD, but once it gets more traction and becomes more widely used, that trust piece is so important. And so I think we'd be putting a real-time proof of reserves with a third-party open banking provider scraping out, well, not scraping, but APIing our bank account data and showing this is how much is in the bank, and then that can be mapped against what's on chain. And it's it's really just tokenizing a real-world asset, right? And so that transparency is really important.
What's the kind of regulatory environment like in New Zealand and Australia? I guess one advantage building in New Zealand could be to be kind of closer to the people who actually regulate that stuff. Right? Did you see that when you kind of built Easy Crypto? Did you have like easy access to kind of discuss this new market with regulators?
Yeah, I think New Zealand is such a great market from a regulatory point of view because for one thing, we've got a single layer of government. We don't have sort of the federal and state that America and Australia as well have. And we also have, like, because we're a small market, regulators are really approachable. Like, you can call them up, you can talk to them, they actually will meet with you, they'll have a coffee. And our regulators tend to take the view of, we want to help you be compliant rather than we want to slap you on the wrist for being non-compliant. And so in other markets, you see a lot of regulation by enforcement. In stablecoins in particular, this is something that the Australian market are quite concerned about. Like, everyone's kind of waiting for the first enforcement action to be taken against a stablecoin because it's just edged too far to a line, but no one knows exactly, which stablecoin that is and what line they're going to have edged to. But it's commonly expected that will happen. Whereas in New Zealand, we've kind of almost got the opposite, that the FMA here, the Financial Market Authority, have just set up a sandbox for fintechs for innovation to help encourage innovation and help clear the way where there is either regulatory impediments or regulatory uncertainties. And the FMA has the ability under law to give exemptions. So it's like, hey, the law says this, but we're going to give you an exemption. And so they've just announced six companies, six fintechs that are going to be working with them in the sandbox. And NZDD is one of those. That's really exciting for us. We're going to take that opportunity to look at how we can build yield-bearing instruments for NZDD and how we can do that with, without perhaps, because part of the problem we have with NZDD is that it's like a financial product in the ways that are different from the parallels in traditional finance. Like, if you hold NZDD in your crypto wallet and you're earning interest on it, that's kind of just like a bank account, right? Like, it should be pretty key, but because it's more, that actually makes it more like a debt security, which then has, product disclosure statements and various things, and like a lot more onerousness being put on that. So there's potential for making making that a smoother, easier process. And that's something we're hoping to work through. Whereas New Zealand's kind of the opposite. And here we've actually had the FMA, which is the Financial Market Authority. They've actually just set up a sandbox to work with fintechs and innovators to help navigate through regulatory uncertainty or to grant exemptions to regulation to make it easier for people to innovate. So 6 companies have just been announced in that. NZDD is one of those. And we're really looking forward to working with the FMA to sort of look at how can we help innovate and do cool new products and services with NZDD where perhaps the law isn't particularly clear for us or where there's challenges applying traditional finance law to crypto products. So yeah, it's really exciting.
That's cool. Janine, how does it work with like aren't you basically kind of doing what a bank does, which is that you sort of issue a currency and you're sort of at that point competing with the government, right? That's sort of been the whole, I think, at least during the Biden administration, the whole kind of like, I think, overtone of the whole regulatory crackdown on crypto is that like these stablecoin providers are competing with us and like we should be the ones who have like a central bank stablecoin, right, or whatever that we control, and not like this shady Tether or organization based in the Bahamas or Circle or whatever, right? So was that ever a question? Did people in the government ever say like, you're doing the thing we're doing and like you're sort of usurping our power to issue currency?
I think in New Zealand, it's a little bit different that for starters, I don't think the government is sort of looking at going, oh, this is our territory that you're stepping into. What they are looking at though is like globally, US dollar stable coins are massively used globally and in New Zealand, right? So there's almost the opposite concern of it's not New Zealand dollar issued by government versus New Zealand dollar issued by private sector. It's New Zealand dollar issued by government versus stable coins issued by overseas parties. So I think there'd be a preference almost for a New Zealand dollar stable coin to be acting in that space, that, have New Zealand end up, like, can you imagine if Tether ends up being the reserve currency of New Zealand? That's a much worse position for the government than a New Zealand dollar issuer where they could have more controls over that party and how they interact with the New Zealand dollar. And actually on the Reserve Bank side, like the government's actually they've been consulting on the future of money, looking at issuing central bank digital currencies, looking at stable coins, looking at how, can we open up the payment network in New Zealand more? Can we open up the interbank settlement? So there's actually a lot of innovation happening in that. And I think the government is leaning into it more rather than trying to shut it down, which is really encouraging.
Interesting. What do you think this whole thing goes? With money, it has really, really deep, strong network effects. It's like one of the classic kind of network effects, ideas as in money, right? If I have a certain currency and then the 3 of us have a certain, one of us kind of gets the same as the other one, third person's incentivized to get that other currency to transact, right, with the biggest pool possible. And so I think that's kind of USD has sort of become such a dominant currency because for a number of reasons, but actually like the more people that use USD, others join and they want USD to transact. Do you feel like stablecoins just take that to the limit where everyone just uses then the USD stablecoin? Like, how do you think about, like you mentioned, Tether becomes this reserve currency of New Zealand or the most commonly used kind of currency to transact in New Zealand. Do you think we're going in a direction that's like that?
I hope that it goes actually the opposite, where because once you build those bridges and those interconnecting layers, that you'd end up with a world where I can pay in currency X and the merchant can receive currency Y, and we don't even need to know what each other's preferences are, and it can just seamlessly interact. Whereas at the moment, I have to pay in the same currency as the merchant wants to receive, or otherwise it's really complex and expensive to transact in the middle. But digital assets should make that transition super easy. And so, yeah, I would hope that it would break us away from, over-reliance on a single currency or asset rather than increasing it. But who knows? I've been wrong about many things.
Interesting. Yeah, that's a very cool view. I like that.
I'm personally waiting for that in messaging, because I was like, the number of messaging apps I have is so frustrating. I'd be like, I'd love to just have one and all my messages come into it and I can just send, and people receive in whatever app they want. I know there is one beeper that's trying to do that, but it doesn't work very well yet. And I'm like, but maybe in the future, messaging and money and all of these things will just have nice, beautiful, interoperable layers, and we can all just engage with our, preferred platform of choice, and other people can have theirs and they don't need to be the same.
Yeah. Maybe, I don't know. But I think that's a problem people have been seen many startups try to work on that problem. It's a hard problem because actually, like Apple and Facebook and Google, they actually, some ways don't want to play with each other, right? In some ways, they want to actually keep their walled garden as much as possible. And
where those walled gardens are controlled by, say, the platform, like iOS, it makes it pretty tricky as well.
Yeah. It's an interesting kind of idea of with a lot of tech, we see this aggregation of resources, network effects, users to the top platforms, right? And crypto in some ways is kind of meant to be almost hedge against that, right? Where you have the classic example is you have a social network that owns all your data, but like something that is a decentralized social network, you actually own your data and you can sort of like bring it to the network, engage, or you can, if you leave, you can take all your data and the network doesn't have any of your data, doesn't kind of own anything about you. And that's sort of an idea that I found really fascinating. That like crypto actually, the decentralization piece of it helps the user against like the big platforms. Do you ever think about ideas like that? I mean, I guess now we're going more to like the application layer, rather than the monetary thing. But any kind of thoughts on that general idea?
I did see Coinbase just launched yesterday a new wallet, which they're saying is doing all of that. I haven't looked into it in depth. My view on this has changed a lot over the couple of years. Like when we did our Series A for Easy Crypto, one of the big drivers for me was, I was really passionate about this idea that crypto and blockchain could enable the democratization of finance, like enable, someone who has $1 to invest can have the same opportunities as someone who has $1 million, and people can, like that Web3 idea of being able to own your assets, being able to monetize them yourself. But I've probably become a little bit cynical on that over the last couple of years with just seeing how little traction, how little progress we've actually made in that. And maybe the incentives are just not aligned for that to become a reality, or maybe it needs more time, or maybe we're going to move into Web 4, which will be a completely different iteration. I don't know. I'm sort of, it's confusing to me. Like I haven't got a good thesis on why it hasn't happened faster, but it does make me question whether it actually will happen, because we've had this tech for a while and we've had these kind of like theories about what it's going to enable, but we're not really seeing it.
What does that look like? That eventual vision that you think could happen, what does that kind of world look like?
Yeah, and maybe actually, possibly it's because the user experience hasn't been good enough, right? Because all of this, like when it comes down to owning your own stuff and, having the ability to monetize, like owning your data and monetizing your data and your IP, like it all depends on wallets, right? And if you rewind back sort of 2-3 years, wallets have been really complex. And it's only as we've had things like account abstraction and gas abstraction and stuff like that starting to innovate out of ETH. And I have to say, ETH is like amazing in terms of innovation, and the whole crypto industry benefits from what comes out of there. Maybe as we make the wallet experience more seamless, more integrated into browsers and apps, and less of a challenge for users, then that might be the unlock for then how can we better then monetize data. But the other problem is also you're up against the vested interest, right? Like big law changes like GDPR that's sort of requiring companies to play in a certain way, but they, apart from regulators forcing them to, they'll never really have the incentive to give that Web3 ownership over to the individual users. And whether people actually have the desire to demand it, like I think it's just, I know I'm perfectly guilty of this, where I'm like, I could use this open source thing, or I could use the product that I'm used to and I know that they're using my data, but it's just kind of easier. Like sometimes I fight that battle, sometimes I don't.
Yeah.
But I think too many of us globally, we're just not fighting that battle.
Yeah, and I think there's probably also a lot of efficiencies in centralization, right? So, I mean, I think in theory, the idea of decentralizing social networks and all of that makes a lot of sense to us. But there's also, the power that you have in a centralized network and the resources that you have enables you to create a much better user experience. And the user at the end of the day, as you said, like we just care about having a good experience, right? So I think that's kind of what's holding a lot of these things back.
Yeah, and the trade-off for that good experience is often I'm giving up my data or my ownership, and like, we're just like, hey,
who cares?
This is what I'm getting.
Yeah. No, that's super interesting. I think so normally we would kind of go through the founders' life stories and, talk about what their childhood was like and what they experienced in their childhood that made them become.
We've gone way off piste, right?
Yeah, no worries at all. But maybe we can kind of go sort of the other way. So before starting Easy Crypto and before kind of getting involved in blockchain and crypto and all of that, what was your life like? Like, what were you into? What did you work on before starting Easy Crypto?
So my career overall has been a little bit of a random walk. Like I did economics and finance at uni. Well, actually, I'll rewind a little bit. I dropped out of high school at 15 just because I wasn't enjoying it. And for some bizarre reason, my parents were like, yeah, you'll be fine. Don't worry about it. So I dropped out of school, worked at a cafe, went and traveled around Europe, like just, did a few bits and pieces. And I came back to New Zealand in my early 20s and did university then, did finance and economics. And then I kind of just sort of hopped from interesting job to interesting job. I didn't really have a clear career path or a plan. It was just more, when I was ready to move jobs, if there was a job, whatever job looked interesting and looked like it would challenge me and teach me something new was where I went into. So I worked in local government initially, then ended up in tourism and then major events for a little bit. Then I worked at PwC doing consulting, which was probably one of my favorite jobs because I just stretched through and learnt so much in that job. And it was really demanding, but it was, such a good such a good build of skills and knowledge. And then from there, I went into Westpac, where I was working in their strategy team. And that was when I started Easy Crypto, and probably don't recommend starting a crypto business while working in a bank. And so after that became a little bit uncomfortable, I hopped over to Air New Zealand and did strategy with them, which is where I was when COVID hit, actually. I just resigned, actually. I'd left Air New Zealand in January 2020 to go and do full-time with Easy Crypto. And then COVID came down the line, and I was secretly a little bit gutted, because I was like, doing strategy for a global airline in the middle of a pandemic, like, fascinating. Like, there's no playbook.
Wow.
They made
why do you not recommend starting a crypto company? Why?
Oh, sorry. Why was that? Just because I guess I naively thought that it wouldn't be an issue. Like, it didn't occur to me. Like, I remember when we started the business, I was like, cool, well, we need a bank account. And I work at, a bank, and here is we've got a personal banking team for staff. So easy. I'll just pop downstairs, open a bank account, all good. And then the next day I get a call from the head of risk being like, what do you think you're doing? I was like, I was just starting to opening a bank account for my side business. And they're like, no. And so, like, I wasn't able to get a bank account at the bank that I worked at or any other bank that I approached. Like, I went to every bank in New Zealand.
Wait, why?
It is a really complex topic. It's one that, the banks will sort of say it's outside their risk appetite. I think there's a number of reasons. One is the anti-money laundering risk, and it should be clear in the AML Act where the responsibility sits. Like, does a bank only need to worry about their customers, or do they need to worry about their customers' customers? And because there's concerns there around where does that chain of responsibility stop, no bank wants to bank a crypto business if they are ultimately responsible for that business's end customers. The other issue is around sort of like the front page of the Herald test. Like, I think banks are concerned that if something goes wrong, they'll be on the front page of the Herald. And sort of, I always beg to differ on that one. I was like, you don't see a news story of, XYZ business goes bankrupt with a secondary headline of that business was banked by ANZ. Like, no one cares. But I think there's just this real sensitivity and risk concern. But ultimately, I think the real reason is that the easiest answer is no. Like, if you're a risk person and you're dealing with something new and unusual and different, saying, I'll look at it takes a lot of work. Saying no gets it off your desk immediately. So cynically, it's just...
Oh, wow.
Did you talk to your colleagues about what you were doing, and what was their take on crypto back in the day?
Yeah, it was interesting. I had a whole wide range of responses. Like, some people were really interested, wanted to get involved personally. Some people were excited. A lot of people were like, it's just a scam. It's a Ponzi scheme. It's a tulip bubble. It was a whole wide range of responses. Like, some people were really excited and interested and, wanted to get involved, wanted to buy some crypto or learn more about it. Other people just thought it was not relevant, or, it's just a big Ponzi scheme or a tulip bubble or, whatever. There was very little I didn't see people feeling threatened by it. Like, this is a common misconception, I think, outside of banking looking in, that the reason banks, aren't sort of willing to give bank accounts is because they think this is a threat. And in New Zealand, I don't believe that's the case. Maybe internationally, like I know, JP Morgan and Citibank and others, possibly, they have their own crypto plans and crypto programs going on. But in New Zealand, I think it was just ignorance rather than fear that was sort of behind a lot of the...
And was it okay? So it was okay for you to start a business on the side while working. It just wasn't okay to start a crypto business. Is that what I'm hearing?
Yeah, I don't know exactly. It's
Well,
yeah.
if you,
I told my manager about it, and they were cool. But I think perhaps there was, I guess there's a little bit of, I was also quite sort of, Easy Crypto is one of the only crypto businesses in New Zealand. And so I'd been leading some sort of like the crypto industry for some public consultations. Like IRD was doing some consultation. There was sort of like a select committee on cryptocurrencies and other things that I was quite publicly getting, the industry behind and, collated submissions on. So I think it was probably just with one hat, I'm doing this, but then on the other hand, I'm representing this, company as well. And I can appreciate that's complex.
But they were okay. I guess what I'm surprised by is that they were okay that you were starting a business, like in general, like at all, like while working with them. Like, if you had done like an e-commerce store, they would have been like cool with it.
Yeah, like one of my colleagues had started a drinks company and they were cool with it. But I hear that the policy on starting side businesses has since been changed, like whether that had anything to do with me or not, possibly. But yeah, I hear it's not just allowed by standard, but you have to get it specifically approved. Yeah, and also like I can appreciate a business doesn't want, necessarily disrepute brought on them. Like, what if I'd started a cannabis side business or a brothel or something? I don't know. But it is a good question, right? Like, how much should your business, the company that employs you from 9 to 5, how much say should they have over what you do in your life outside that? yeah, it's an interesting tension.
I think in the US, I don't know, but like my sense is like in the US, that would be like, there's all kinds of like non-competes and other kinds of things that you sign when you, so I think like I would actually, my experience, I've never heard of anybody like openly starting a side business while working somewhere else. So I'm actually just surprised by that. I'm surprised that you were just like, hey guys, I'm starting a business.
In New Zealand, actually, like side hustles is like a real common thing. And like, you know, at Easy Crypto, a couple of my staff, you know, now or in the past have had businesses. Like one of them was doing hot sauce. Someone else was doing like clothing costumes and like, or a secondhand. Yeah, it's not uncommon. Maybe it's just more of a Kiwi thing of that kind of gig economy or just.
That's cool.
So what made you?
So how'd you? If you didn't have a bank account, what did you do?
We eventually managed to get a bank account. It was a really long process.
Who gave it to?
We ended up with Kiwi Bank, and they've been really great supporters of us. And it was an interesting story actually getting the bank account. Again, I'd gone to like every bank in New Zealand multiple times, just been said, you know, no, and then I sat down one day, I was like, we've got to get a bank account, or like, you know, you cannot run a business without a bank account. And I went through my LinkedIn and looked at every person I knew who worked for a bank or had worked for a bank and contacted every single one of them and was like, hey, this is what I'm trying to do. Can you help? And one person in my network said, I'll put you in touch with this guy. And that guy said to me, I don't know that I can get you a yes, but if it's a no, I'll find out why it's a no. And I was like, amazing. And so that person just personally took it on themselves to help to take us through that process and to understand why, like where the no came from. And like I said before, right, like if no is the easiest answer, then that's going to be the answer you get. But in this case, we had someone who was championing our cause and made no a hard answer by making no have to be explained. Mm-hmm. And so, yeah, I really owe a lot to that guy, because if he hadn't personally taken this on and sort of, you know, been willing to help find out why is it a no, you know, we probably never would have gotten a yes. So did
he have some equity? Did you give him some equity?
No, but actually later on, he did actually come and work for us. Like maybe 3-4 years later, he ended up working at Easy Crypto, because, you know, New Zealand's such a small world. And
yeah. What would you have done if you hadn't opened a bank account?
We wouldn't have had a business. And this is something that, you know, a lot of crypto companies in New Zealand have not been able to start or stay in business because they can't get bank accounts. Like,
would you have not gone to Australia or the US and just like tried somewhere else?
No, because when we started, we weren't trying to build a global business. We were trying to solve a problem for New Zealanders. And that problem was New Zealanders didn't have easy access to the crypto markets. Like the average price for crypto in New Zealand was 15% above the global market. And yeah, this is a fully digital product, no shipping costs, you know, and yet New Zealanders are paying so much higher. And I think I probably now understand, because it was so hard to get a bank account, you only had people just doing it, you know, out of their own bank accounts and, you know, possibly getting them shut down all the time. So it was risky and it was hard. We didn't know that when we started. We just saw this and went, hey, this pricing's not fair. We should do something about this. And so that's when we started the business. And yeah, and obviously if we had not got the bank account, we would not have started in New Zealand, and then we wouldn't have gone international, and we wouldn't be here today.
Yeah. And what gave you the confidence to go full time in 2021?
It had been building for a while. So we'd started the business effectively end of 2017. So 2018, 2019, I was working full time and just doing this, you know, nights and weekends. My brother was working on the business full time, but he was living in Southeast Asia, so very low cost of living. And effectively, you know, we didn't know month to month what our revenues would be, because crypto markets are very volatile. We're not a SaaS business. We can't predict how many clients will shop with us, you know, month to month. So it was very hard for us to hire staff. And my salary was kind of that buffer that if we don't have enough revenues, I can draw from my salary to help us, you know, keep our staff. But by the time we got to the start of 2020, we'd sort of grown enough in size that we were comfortably able to employ a few staff. And then I was like, cool, it's time for me to come in the business. You know, I wasn't going to be taking a salary, but I could at least, you know, give up my salary and not need it anymore. And then it turned out being really good timing, because COVID just unleashed the crypto markets. Yeah. Like, I think, you know, a couple of forces at play there. I think people sitting at home with time on their hands, finally getting around to that to-do list that, you know, they were like, I've been meaning to look into this Bitcoin thing. There was also a bit of uncertainty about the global markets and, you know, with the financial ecosystem. But I think the biggest one was COVID helped us get a lot more comfortable with digital as a society. Like we started using QR codes, we started doing online meetings. Zoom and, you know, was not that common before COVID. And people started doing their shopping online. And before COVID, the most common question I had when I talked about Bitcoin to people was, well, how does it have any value if it's not a real thing? After COVID, I stopped getting asked that. People understood that digital is a thing and it has value and it can be interacted with. And it's just like our mindsets around digital changed so much over COVID.
Yeah, and I think it's also that liquidity that was available in the market just needed a home, right? And needed
that as well, yeah. All of the quantitative easing and people being like, what am I going to do with this? So,
yeah, exactly.
But, you know, they got it in anything, right? Like it could have all gone into the stock market. Yeah, Bitcoin just suddenly became less scary, maybe less unknown.
Yeah, and when you first fundraised for Easy Crypto, did you find a lot of people in New Zealand who were kind of keen on crypto and who were ready to invest in crypto, like Mark, for example?
I don't know how many of our investors are actually crypto investors, because like our fundraising, we only sort of raised with the VCs. So, Mark is probably one of the exceptions where I know Mark was into crypto, but any individuals were sort of like are not necessarily visible to me because they're inside nominees. So sort of, any crypto high net worths or crypto believers, after we raised, I would have customers say to me that they're investors in Easy Crypto. I was like, oh, that's cool. Or I'd meet someone at a barbecue and they're like, oh yeah, I own part of Easy Crypto. I'm like, oh, do you? Nice. But yeah, the VCs themselves were definitely not, there wasn't a big sort of push towards crypto as an investment thesis. It was kind of more the opposite, that we had a lot of VCs say to us, we're not, crypto is not our mandate, or we specifically do not invest in crypto companies. So yeah, it was a bit of a headwind in that.
So how did you convince them? Because you raised a pretty sizable round in 21. I completely agree with what you're saying. Like, it was, I think, the notable exception in most everyone except for ours portfolio, in terms of like no other crypto companies in like Nuance or GT1s or whatever portfolio, except for you guys, right?
Yeah, and I think some of it, I think the market timing just drove a lot of FOMO, like because we started trying to raise at the end of 2020, and just no one was having a bar of it. We had one offer to buy the business for, I think it was 4 million, or it was something crazy low, but we just kept going, and then the market was doing this, and our revenues were doing this, and valuations were doing this. That's one of the things that I found kind of funny about, I don't know if all industries are the same. It's like when our revenues are up, valuations are also up, multiples are up. So you get this double whammy of not only are you making more money, but every dollar you make is multiplied more in your valuation, which seems a little bit odd. So by the time it got to sort of August, September 2021, there was just this big sort of crypto FOMO, which really helped us, do that raise. And a lot of people were like, thinking they'd missed out on, the prices and stuff. And so this was and buying, selling gold picks and a shovel, selling shovels in a gold rush. So yeah, it was that kind of idea of investing in the infrastructure rather than in the asset itself. And that, I think, swung it for a lot of investors, where maybe they couldn't invest in the asset, but they could justify investing in the infrastructure.
Yeah, and that must have been around the time when Coinbase went public as well, right? So that probably raised a few eyebrows.
Yeah, we were like a few weeks after or a few weeks before Coinbase, really around the same time. Yeah, and interestingly, Coinbase haven't increased their valuation since then, right? They sort of dropped massively. Everything kind of fell off a cliff after 2021. They've come back up now. And they've been doing great stuff. Like they've been building amazing products, going into lots of new markets, really, getting, outperforming their revenue targets. And yet their share price is just like, it's not gone past the 2021.
Yeah. I think that was just a completely overheated market, I think, in that area.
Yeah.
No, super interesting. And what's next for you personally now? So you've sold the business. We talked a little bit before. You're hiking in New Zealand for a little bit, which probably was a much needed holiday. What are you up to next?
I'm not sure, actually. I'm still sticking around with the business for, at least the next year, just helping with transition, helping, look after the team and the customers and make sure that stuff goes as smoothly as possible. After that, I don't know. I think, definitely take a bit of a break, maybe do a bit of travel. And then, I don't know, I really, really enjoyed running a business and creating a product and, building a company. So maybe there's another good idea out there somewhere that I can latch onto, or maybe I'll come work at a VC fund. Who knows?
Sure. Would you build in crypto again?
No, because like I was talking about before, like I went into sort of the idea of scaling Easy Crypto was really around that kind of like philosophical driver of what crypto can do to make the world a better place. And that's quite a big, thing for me of like, I want to be having impact and doing good in the world. And then what it sort of ended up being is that I think crypto is just more about speculation now. And like that might change in the future, but I think I'd have to see that I could find a niche within crypto that really, actually had positive impact, or otherwise it might just be something outside of crypto.
Are there any other areas that you're excited about outside of crypto? Any industries that you feel like you could explore further?
There's so many, right? Like, I mean, everything that AI is unlocking is super interesting because, like, that's a massive game changer that wasn't there when we built Easy Crypto. I think there's a lot of cool stuff in health tech and a lot of potential as we start to, we've got massive data sets that we're all starting to collect with, things like this, and to be able to put AI over that and how we can help unlock things. Women's health in particular, I think, has been quite underfunded, under-researched. There's a lot of opportunity there. But yeah, I don't know. I'll keep my eye out for good ideas and keep you going.
Yeah, let us know.
I'm working with the Ministry of Awesome. So I started just doing a day a week with them, mentoring some of the startups that come through their program. So yeah, there's a lot of great, companies like Ministry of Awesome doing great work with founders in New Zealand. I think it's really important to help build the founder ecosystem to help, benefit New Zealand Inc. by creating great companies that we can help scale and grow. And just like personally, it's so much fun working with them because you've got these startups like super passionate, really smart people, great ideas. And, it's just like, oh man, that was me before I got all cynical and jaded and burnt out and tired. And so it's really invigorating to be back around young, passionate founders. And I mean young as in early in their journey. They're, some of them are older than me, some of them younger than me, but just like, really engaged.
Yeah, and you're one of the, I guess, few people in New Zealand who have been through the entire cycle, right? From starting the company, scaling it, and then successfully exiting it. What are like your key learnings or takeaways that you would kind of like to let other people know about?
So many, right? I'm doing a bit of a series on LinkedIn at the moment on some of these, but there's so many learnings. And I think one thing is it's so much harder than you think it will be. And, like we talked a bit before around, our inability to get a bank account. It's like, that's not something that I ever would have thought coming into the business would be a hurdle. And I think every startup has different hurdles, but there's always so many hurdles and hurdles that shouldn't be hurdles. And, you need a lot of resilience to be a founder. But I think the other lesson that I learned is that you build that resilience as you go. And so, the person I am today is so different from who I was when I started Easy Crypto. And I've just learned and grown and stretched so much along the journey, which has been, probably one of the coolest things for me out of this is just how it's changed me as a person. Yeah. And then there's just like, there's so many lessons on like, we talked before around like, the usability and making things easy for your customers, keeping things simple, building really great culture. That's something I'm really passionate about and something I'm really proud of with Easy Crypto is that we've always had really high engagement. 95% of people enjoy the work that they do and are happy, proud to work for the company. And to me, that's like one of the biggest markers of success is having created a place that people like coming to work and enjoy what they do. And I think that's a real, value add as well. Yeah, I could go on, like there's so many lessons, but I'm really happy to share them with people as well. And so, anyone's welcome to reach out to me for input or advice if there's something that I can offer. But yeah, it's been a very cool journey.
Fantastic. And we talked a little bit about kind of the benefits of building in a country like New Zealand that is, much smaller, a little bit far away from everything. Quite obvious in crypto because of kind of the regulatory uncertainty. But do you feel like New Zealand is a great place to, let's say, build a fintech company or a SaaS company or an AI company?
Yes and no. Like, yes, from the point of view that we have like great talent, regulation's pretty good. Regulators are accessible. Our digital infrastructure is good here. But it just depends where your target market is. A lot of companies find it, like New Zealand is not a place to build scale. Like you're not going to make a unicorn business with New Zealand as your customer base. So if you need to go into international markets, can you reach them from New Zealand is probably one of the big questions. And I think this is one of the things that, we were scaling out internationally over COVID years, and it was really challenging. Like so many founders that I've talked to have been like, you have to be in market, like physically in the market that you want to go into. And, I think they're right. And we weren't able to do that. We couldn't go to markets. And so I think that is one of the downsides to New Zealand is like, we do not have the critical mass of population here to make the business, as big as, if you want to grow it big, New Zealand's not the country to do that in. And then if you need to reach into those international markets, maybe you have your tech and your idea and stuff start here, but you might have to physically go and be in market to really get successful.
Beyond New Zealand, you guys expanded Australia, you expanded into the Philippines. I remember Brazil, you were exploring different markets. What's your sense on the whole kind of like ecosystem and where things are going? How widely adopted is crypto? Like I know stablecoins actually are widely used in third world countries and countries that don't have access to dollars because protecting their kind of local currency debasement. What's your kind of sense? Where is the industry today, and who's using it, and what are the use cases?
I think New Zealand's one of the less adopted countries in the world. Like we're at around 10%. Australia is more than that. All of Asia is more than that. And like you say, like a lot of developing countries are, getting into particularly stable coins as, for payments, for store of wealth. I think it is becoming more commonplace in other places, but it's still like it's not replacing banking, right? Like we're years away from that happening probably. But I think it is becoming more integrated, and the more sort of like seamless integrations there are between different financial systems, probably the easier that adoption will be. I think, there are, and also the integration between like cryptocurrency or, those kind of digital assets really lend themselves well to digital environments. So online gaming is like one of the places where you see a lot of cryptocurrency, and a lot of the time, like, quite well embedded as well. And so I think, e-commerce, online gaming, digital work, like all of those things are probably going to be the early adopters, just because it's a real natural fit for digital currencies and programmable money.
Mm-hmm, mm-hmm. Do you see crypto eventually superseding banks and banking systems and government fiat? How do you see that whole kind of thing developing?
I see digital money replacing traditional fiat money, but there's three options there, right? You've got your government issued digital money, you've got your private sector issued digital money, like if banks start, taking things digital, and then you've got your decentralized cryptocurrencies. And I think it would be a stretch to see a world where the decentralized ones win. And in private money, I'm including stablecoins there because they are privately held and owned, right? Like DAO would probably be decentralized, but DAI decentralized, USDT, USDC are private money. And so I think that middle cohort of private money is probably where we're going to be heading, with a bit either side. There'll be a bit of government money happening and a bit of decentralized money, but it's probably going to be, hopefully not owned by the banking system. Like, I feel like they've had their dash, but at the end of the day, like, if it's private money, it doesn't really matter who owns it. It's not you.
I see. Do you, do you think the whole, like, kind of like new administration in the US, like the Trump's, like, kind of digital Bitcoin reserve, et cetera, do you think that's, like, it seems like on the surface, like, it's pretty bullish for the whole thing, for adoption, for, I guess, for the price movement, et cetera. Do you agree? Or are there some maybe things that we're not considering where, like, maybe, again, it gets, like, usurped by kind of the vested interests, right? Like the BlackRocks and the whatever, right? And they kind of...
Yeah, I mean, I think it's quite bullish. It's been interesting how the market's reacted to it, right? Like, we haven't seen Bitcoin go back up over 100K despite all these quite positive signals. And is that because there's too many headwinds with, tariffs and all of the uncertainty in the economic environment? Like, potentially Bitcoin could have been down at 70. So maybe the fact that we're in the 90s is still, showing that resiliency.
Mm-hmm.
I think, like, fundamentally with Bitcoin, I come back to, there is only 21 million. It is unlikely, well, it's technically possible that more could be issued. It's very unlikely. The vested interests, wouldn't vote in favor of that. And if, ETFs are holding large chunks of it, if governments start holding large chunks, if it starts to be used as settlement layers for, you referred to China and Russia settling with Bitcoin before, like, the demand side, like, there is not an increase in supply happening, and there are a lot of rationales that would lead to an increase in demand. So I don't know. I'm long-term bullish on Bitcoin, but not famous for this.
What about use cases of other crypto? How are you thinking about, I mean, we saw NFTs come and go, right? It seemed like there was some use cases there. It was actually pretty compelling, but then somehow just kind of deflated. I mean, the DeFi is maybe the other one that people kind of take a look at, and there's interesting kind of like permutations and things you can do with on-chain that you maybe can do, right, with a traditional finance system. What do you think about, like, the use cases beyond just stablecoins and digital gold? Or are there really any? How do you think about that?
Yeah, I tend to sort of like, and I categorize crypto into four buckets, right? There's Bitcoin, which, we've already talked about, I think, is a bit of a category of one. Mm-hmm. There's stable coins, which, they have a very clear niche in terms of the value is not volatile, but they act like a digital money. They're programmable. You can put them in smart contracts, near infinitely divisible, all of that good stuff. Then I think NFTs is the third category, and I think they will have a resurgence. It was interesting with NFTs that the first version we saw of those was all around art and collectibles. And collectibles is a thing. Like, there are real world asset parallels to that with baseball cards and artwork and this and that. But the real value, I think, at NFTs is that provenance, like, it is basically a unique digital identifier. So digital identity will probably be going on NFTs. A lot of our supply chain logistics, all that kind of stuff. So I think NFTs will have a resurgence. And then the fourth category is what I call everything else. And that's where it's like, there has to be a use case, and you have to be able to see product market fit, and you have to be convinced that actually a blockchain solution is better than a non-blockchain solution. And if if it's not Bitcoin, if it's not, with DeFi, I think stablecoins will be, the main player in a DeFi space. And NFTs, obviously, I think, that idea of unique digital identity is going to link in with that really well. So then what else is there left? Like, there will be ideas, there will be things that come up, but a lot of it's going to be met by stablecoins and NFTs in terms of what the use cases actually are. So,
and then, I mean, I got a little bit depressed a little bit in this last cycle because, like, a lot of the liquidity was going into like Solana and shit coins, right? Basically gambling, right? People create fart coin, and then I think the epitome of that was Trump coin, right?
Yeah.
Which was just a blatant kind of money grab.
A great way for anonymous bribery as well. Like,
Yeah.
yeah, it's been really fascinating to me. Like, yeah, I find the meme coin thing, like, it is a bit depressing. Like, when, you know, I'm here for the tech, is, you know, what all of us OGs in crypto say.
Yeah.
But it's also kind of, it's just the internet doing what the internet does, right? And in some respects, it's been wholly predictable that the internet's all about a lull and virality and people trying to make a quick buck. And I think the other thing that really gave meme coins a lot of headwind was the SEC's stance against crypto, right? Because anytime you try to issue a crypto that might do a thing or might offer people value, you've got the risk of the SEC coming down like a ton of bricks. But meme coins are so literally valueless. They go out there saying, we are not going to give you any return. We don't promise you anything. And, you know, buy this at your own risk. We're not giving you any money. We're not, you know, there is no return attached.
We're actually here to take your money.
Yeah. And so they're so far away from being an investment product that they can be issued and people don't worry about the SEC's, you know, things. So it's kind of like we've almost had this like wasteland for the last couple of years where any tokens doing real world, valuable, useful things are a bit afraid of the regulatory environment, whereas tokens that are completely speculative and do nothing are pretty safe.
Yeah. And I mean, I've seen some interesting use cases, right, that are like, for example, fractionalizing real estate and other assets and allowing you to own a fractional piece of it, or deep and decentralized infrastructure, which things like Helium, you know, I don't fully understand how all these things work, but the idea is like you can take these ideas of decentralization and bring them to like other assets and other use cases. Do you think any of those have legs? Like, do you think any of those will become a thing that we use? Or do you think they're just kind of like interesting, cool ideas, but just won't work? Or maybe they're just too early?
Possibly a bit too early, but things that, you know, stuff is always going to be too early, right? Or it never happens. There's actually, I think one of the other sandbox companies is tokenized real estate. And like a lot of people have been talking about this for quite a long time, right? And I think it will be eventually, you know, it's kind of a no-brainer eventually, but at the moment, land titles aren't digital, and neither is the process of buying and selling. So you kind of, it's almost like this intermediary step where we don't have a digital, you know, land database underlying it. So then you've got this middleman that takes the non-digital thing and puts it into a digital format and spits it out. And like, it doesn't necessarily need to be blockchain, like sitting in the middle, like we have, you know, existing mechanisms for, you know, fractionalizing assets, you know, using a spreadsheet and an intermediary. And it's like blockchain absolutely is a better system for doing that. And it's more transparent and you can have these secondary markets spin up and all that kind of stuff. But until the underlying systems digitize, it's almost as too early, but you've got to start somewhere, right?
Yeah. I think there's a lot of like things where there's a tokenization of something, but then there's also the question like, do you need to actually tokenize it? Because you can fractionalize an asset, right, without tokenizing it. And in some ways, that's sometimes more efficient and better because people know how to use it and how to actually access it.
And also even just really practical things like the tax treatment for like, you know, take property, put it in an ETF. That's probably going to give you a better tax outcome than, you know, fractionalize on it. Like, and there's that kind of thing, like our existing systems were built for the existing assets and blockchain will be a better way of doing it, but better isn't always, you know, better doesn't always win.
Yeah, exactly.
Yeah, I mean, and the last kind of almost maybe nail in the coffin of like ideas of like building stuff on top of blockchains is a lot of these blockchains, they have this, you know, what is that? The three, you know, 2 out of 3. What is it, like speed, decentralization,
scalability, trust, and decentralization? Is that it?
Yeah, something, and maybe speed. But yeah, like
scalability, decentralization. Maybe those are the 3.
Yeah, exactly. So like, so you see a lot of like folks like it's like Solana and ETH, right? ETH is like more or less decentralized, but kind of expensive. A little bit slow, and Solana is like super fast, but super centralized. And so then it's like, well, then why not just use, you know, just a database hosted on Google or on Amazon versus like Solana, which is maybe right? Like, what's the pro and con of doing that? Yeah. So I don't know if you ever think about that. Like, do you kind of then think all these coins, like, because there's a lot of coins, right? And some of them are trying to build tech. A lot of them are just junk. Like, do you just think is just like, this is all just junk? Like, you put it in this like 4th category of everything else, but like, yeah, I don't know. I just think about it a lot, like what will come of it. There's smart people working in that space, right? And but I think a lot of them eventually, or not all, but some of them eventually gonna just like, it's like much easier to launch a meme coin than to like build hard tech.
I'd be curious to know out of there, because like there's tens of millions of cryptos out there, and I'd love to know how many of them are meme coins. Like, is it more than half? Like, quite possibly, right?
I'm sure. Yeah.
Which is like, yeah, it's kind of crazy.
But it's like, well, what do you consider like Bitcoin Cash or like Litecoin? Or Ethereum Classic. Like, are those meme coins or are they like, like, I mean,
Maybe now they are. They weren't when they started.
right, right. I mean, there's like explicit meme coins like Doge, but then it's like if you build something that's like, I don't know, like a fork of something else, it's like who's using that? Is anyone actually using that? Like,
yeah, and it's crazy, right? Like when you look at some of the market caps and some of the transaction volumes of some of these, and you're like, people are still using them. Like,
Yeah.
yeah, I think Litecoin is used a lot on gambling sites, which is interesting.
really? Why?
I guess transactions block speeds. I don't know actually, but it's just something that I've noticed, and it's one of a lot of our customers will buy it to send to stake.com or something like that. So
Interesting. What did you see about like kind of like volumes and like what people buy? Did you learn anything interesting like by watching transactions on Easy Crypto?
yeah, so much stuff. Like sometimes some of it's kind of helpful for us with like trying to detect scams. Like I won't say what it is because I don't want to give away too much, but there's a particular network that is actually more commonly used for scams than other networks, which is kind of interesting.
Was it Tron?
Yeah, and that to me is fascinating. It's like, why do gambling sites use Litecoin? Why do scammers use Tron? I mean, who knows?
Yeah, yeah,
I mean, I know there's arguments around speeds and settlements, but like, there's a lot of blockchains out there.
yeah, yeah.
Also, like patterns of how New Zealanders move, and I've seen it change over time, which is quite interesting. Like for the first couple of years, it was just like this real clear, sell the dip. Whereas now we
Sell the dip.
yeah, and like we always do more trading when the markets are more volatile, but we're seeing less of a everyone panicking and getting out, and more sort of resilience, I guess, in the markets. We're also seeing like customers who have large crypto holdings often act quite differently from your small like mass market, which is kind of interesting.
What do they do? What do they do? Tell us more.
In terms of like who's buying and selling at different market movements, the high those with big wallets often are acting counter to the rest of the market, and often acting the long term smarter way, which is interesting. And we've also the ratio of buying and selling is so much more even now. Like when we started, it was probably 80% buying and a few people selling. I guess that makes sense, right? Because people need to buy into a market first before they have stuff to sell. But now it's pretty even. And maybe the last thing we see is just the altcoin prevalence. Like Bitcoin was probably 80% of all of our volumes in the first few years, and now it's down to often under 50%. Like still, pretty much always the top, individual seller, but not so dominant anymore.
Janine, what do you think those big wallets know that the rest of us don't?
I have no idea. I should ask them, be like, hey, can I give you some crypto to trade for me? But
Did you guys ever like do that, like copy trade some of these big wallets?
I don't. I've never copy traded customers. I don't even know if that would be legal, but I do wonder if they just have like a longer term view on it. And like, because I think this way a bit about crypto. Like when I'll see the price going down, I'm like, this might be a good opportunity for me to get more. Like I said, I'm not good at picking the market though, but I do have that kind of view of like, I'm not like, shit, I need to get rid of this because, I guess if you don't have a lot of, if your total wealth is, if a small amount of crypto is a large amount of your total wealth, there's a more obvious reason to panic. Whereas if perhaps people have larger wealth overall, then what they have in crypto is less, there's less emotion attached to those dips and perhaps more of a, this could be a good buying opportunity.
So what you're suggesting, to make sure I'm clear, you're suggesting you remortgage your house and put it all into doggy.
All into Doge, yep. Doge on TRX, and just ride the wave.
I mean, without joking, like, what do you think? There's like a certain percentage of like an average person's net worth that should be in crypto? I mean, there's like Ray Dalio, other folks have talked about this. Like, do you think there's like a good number for people to think about?
Yeah, I've sort of been told around 5%. I personally would be a little bit more bullish and say maybe 5 to 10. But I think that's kind of like the number that gets commonly bandied around. I'm definitely personally overweighted in crypto, and I'm sort of like, I'm actually okay with that because I'm still like, I wouldn't, yeah. I think my worst idea would be like if I sold down my crypto to get to the ideal 5% and then crypto moons and I'm like, I'd rather buy the ticket, take the ride. I'd rather see where this thing goes. And if it goes to zero, then like, hey, so be it. But it's kind of fun to think that maybe it could go higher. Bitcoin go to $1 million. Like, the thought exercise on that one's pretty cool.
Yeah. And I think one thing that I like was looking, I mean, if you look at what the proposed kind of US Treasury, Bitcoin Treasury annual buy rate is, like they plan to buy whatever number of Bitcoins are mined every year. Like that's the equivalent amount. So like basically if you're saying like you're getting in a market, like an entrance into the market that just takes away the entire supply that's currently circulating, right?
Yeah.
or at least new supply that's coming into the market. I mean, that will at least, I don't know how the math works out, Henrik, you probably know better, but doesn't at least like double the price, but probably even more.
It depends how much other supply is coming into the market from people selling and how that's impacted. But you might actually have a double impact on supply, where not only are they buying the minus supply, but because there's that confidence injected into the market, less other holders are likely to sell. So you might have supply reduced even further, which...
I think that the reason why people haven't priced that into Bitcoin yet is that might change in 4 years, right? Like there's just so much volatility in terms of regulation that...
It might change in 4 months, right? Like, I mean, It's not like there's a massive consistency in the administration and, not every tweet makes it into reality, right?
That's it.
But Trump launched a meme coin, right? Like Trump was like, I think his family's like massively, like you see his son like tweeting like, now's a good time to buy ETH. Now's like, I'd be buying ETH. Like he's fucking tweeting shit like that.
Yeah.
So I assume they're like overweight on crypto and they probably understand that they can move the market, right?
I mean,
I assume if you know that information, it's like, well, it'll at least kind of go up from here a little bit. Probably won't drop. I don't know.
Yeah, but I think that's a risk, right? Because like if that's seen as like illicit behavior by the other side, they might want to ban it in the future. Actually, I mean, I definitely think there's some good stuff around.
China's been trying to ban Bitcoin for years.
No, not
well, China's banned Bitcoin like 20 times, right? Every year they ban Bitcoin.
Yeah, not ban
and
it.
India,
like
India's been banning and unbanning crypto, and I think it's just proven that you can't actually, it is too far gone. It is too decentralized. It is too available. The governments can't do that.
No, I agree. I think it's not about banning, but I think like if this is seen as like bad and illicit behavior, then the other side, once they get into power, they might just want to stay away as much as they can, right? And go back on some of those sort of deregulation things. So that's, I think, is the risk.
Yeah, maybe. But I feel like the crypto crowd, I mean, like it's kind of like, it's a very like reflexive kind of thing where like, crypto goes up, they get richer, they donate more to politicians. Those politicians win, give more like positive regulations for the crypto crowd. Number go up, they get richer, they donate more. It's like a reflexivity there. That I mean, right? Like even like in this past election, I think like there was a lot of donations to Trump from a lot of the crypto folks, exchanges and individuals. And like I think a lot of that money they made because like literally like crypto went up in price, right? Over the last like 10 years. So yeah, I don't know. I feel like, maybe it is actually now an industry, a lobbying group that will lobby for those interests. How important is the US in all this? Because we talk a lot about the US and like regulations in the US. I had a friend who like built Tensor, which is a Solana NFT marketplace. And he was based in Canada because he was like, look, the US it's so hard to do business there. And during the Biden administration, at least, I think now he's back. But is it still the biggest market, or are there other big markets that kind of buy in? Like, is the Middle East big? Is Asia big? Like, because we've talked about the US a lot, but maybe you have insights into like how big other markets are, how important they are.
Yeah, I don't know off the top of my head sort of the actual trading volumes, but like a lot of cryptos trade in Asia, right? So I'd say more cryptos traded in Asia than America. And yet America does have this massive influence in terms of, that whole thing of America sneezes and the world gets a cold, like that happens in crypto, right? Like, as we've talked about already, we've got US dollar stable coins are the global reserve for crypto. Like every exchange from Asia through to Africa uses US dollar stable coins as their base for trading pairs. And also the regulatory actions in America, like, XRP's been, you just look at what's been happening with the XRP and the price of XRP based on SEC decisions. Like America is hugely influential in crypto, and I would say more than it should be, right? But that's the way our world works in a lot of areas, that America is sort of has this outweighed influence or has done up till now.
What do you think of this idea of like, I mean, you're seeing this a little bit now where like now you have AI has gotten to a certain level where like AI can trade for you. You can just like deploy trading bots, right? That like just go and, I don't know, do market making for you or set the right range and whatever. Like, what do you think about that idea? Because when you think about it, it's like crypto feels like the natural currency for AI to transact with. And as AI gets smarter, maybe even into AGI, like it feels like that's what it would use, right? It wouldn't use anything else. So I would use something controlled by humans. Do you ever think about that? Is that something?
Well, it would have to use a digital currency, right? Like it doesn't have to, but it doesn't really make a lot of sense for AI to be having to try to API into your bank account to, do all that kind of stuff when you can just have programmable currencies and have it, it's more native. Yeah. Digital currency is native for AI. Like, but I can imagine AI will, start off with using credit cards and stuff just because that is the tooling that we have at the moment for payments. In terms of trading, like, firstly, I'll just put out out a disclaimer that if anyone is looking at an AI trading bot, it's probably a scam. So just take that with a grain of salt. But it's unfortunately, that has been up till now, every time a customer's been like, oh, I'm looking at this AI trading bot, it's always been a scam.
Why?
Now,
Wait, why?
because scammers like to use things that people like. The ideal world for a scammer is something that sounds plausible and sounds like it's going to make a lot of money, but the customer / victim doesn't know anything about, so can't fact check it. And so crypto has been ripe for scams because it's like people are like, well, I know a lot of people make money on crypto, but I don't know anything about it. So scammers are like, perfect. And AI plus crypto is just even, better. So up till now, all of
Hey, Janine,
AI...
that's not true. Elon did transfer me 10 Bitcoin.
Yeah, he said if I just give him one, he'll give me back 10.
Yeah.
Up till now, all of the AI trading bots I've come across have been scams. Unfortunately, I imagine that will change, which then just makes it a bit more complicated to tease out the real ones from the scam ones. But, if anyone's in that space, hit us up. We can help you with what to look for. But it's kind of an interesting one, right? Because once everyone, it's sort of, I wonder if it's one of those arbitrage opportunities that being an early adopter, potentially you can get the arbitrage that's there. But presumably once everyone starts using AI, it will be best model wins, right? Just closest to the stock exchange, physical distance to the stock exchange was how you won with trading the share markets, having the best AI model. And so who's going to be developing those AI models and selling them? And if someone develops a really good AI model, would they make more money just deploying it themselves rather than opening it up to a lot of people, which is one of the sense checks with AI models. If it really made the money that they say it would, why would they let you invest your 10 grand rather than just keep it?
Exactly.
There's a limit, right? You cannot trade, 100% of the market can't trade on the same AI bot. It won't work. So you have to have people trade against. So you need to keep your circle of who's using your algorithm and logic, somewhat tight. So yeah.
And is that because the market is a zero-sum game?
Yeah.
Yeah, I think that's one thing that I think...
It's a zero-sum game that's also a confidence game. So the whole thing can go up. But every trade you make, someone has to be losing if you're gaining on the other side of that trade.
Yeah, well, what are founders kind of building in Australasia? What, thinking about crypto, thinking about blockchain, what would you advise them? What would you recommend? What would be your advice for folks here exploring the space?
One of my main things that I've learned from founder journey is probably applicable to all founders is just the power of your networks. And so if anyone's starting out building something, it doesn't matter if it's in blockchain or anywhere, is really lean into those networks and use them, because I think, my personal view is that everything you need in business can be unlocked by someone who is one connection away from you. And so just finding that right person and finding that right connection can make all the difference. So go to events, go to conferences, leverage your LinkedIn, hit up people you know. If you know Mark, ask him for a favor or an introduction. The network is an incredibly powerful tool that perhaps I know I personally underrated a lot when I was starting out.
I love that advice. And that helped Crazy Crypto get started with that opening the bank at Kiwi Bank. Right?
Yeah, wouldn't I have a bank account without having used the network? And it's come through for me so many times. Yeah.
That's awesome. Thank you, Janine.
Great. Well, it's been really, really fun. Thank you so much. Congratulations again, and hope you're going to have good time transitioning, and then we're going to follow you whatever you do next.
Awesome. Thanks, Hendrik. Thanks, Mark, and all the best for the NZVC. It's been so great working with you guys, and really appreciate all your support and help over the years.
Oh, thank you.
Thank you.
Thank you, Janine.
Thank you for tuning in to TechMates. If you enjoyed this episode, be sure to subscribe, leave a review, and share it with friends. We'll be back soon with more stories of Kiwi and Aussie founders reshaping the future and disrupting down under. Until next time, keep dreaming big and daring to disrupt.